Good morning, Wall Street winners. It is Tuesday, November 19th, and the threat of nuclear war in Russia and the Ukraine, with the use from the Ukraine of longer range missiles provided by NATO and the US into Russia to perform attacks, and the first one having just occurred this past evening, has caused the markets to be a little rattled and the VIX, the volatility exchange, to jump fairly dramatically, certainly in percentage terms. It took a bit of a pop. So you'll see that as we look at the three US indices, all of them are off 1% this morning, going into the open at this point in time. And we're about 15 minutes from the open at this point based on the Bloomberg app here and where we are. If you turn our attention to the front, it's that Ukraine carrying out its first strike with US missiles into Russia. That's really, really creating some havoc. I think that will all start to settle down as it plays out in the next couple of weeks. At least I certainly hope it plays out and we don't have any nuclear attacks going on. That would just be crazy across the board. But these days, you never know what's going to happen. If we turn our attention to, it makes this whole thing seem fairly irrelevant if we're not going to be here after a nuclear attack in a few weeks. But hopefully that's not the case, and they will come to their senses and sit down at a table and start discussing how they can settle this war and bring it to a conclusion quickly. We can see at the top here, crude oil is off slightly. I'm actually surprised with what's going on in the Ukraine and Russia that crude is not off more. So it had a nice little pop yesterday. It was up from the 67 range up to the 69s. And right now it seems like it's one of the unaffected commodities coming out of the unrest over there in Eastern Europe. Then we scroll over further and we take a look at the NASDAQ. It's off here. And then the VIX. The VIX has jumped 2 points today. So up almost to 18, where it was down at 14 in just the last 5 days or so. So that's interesting to see that move. And what you'll see based on that is a lot of red on the screen this morning. So Costco had a great day yesterday. It's pulling back a little this morning. Lulu had a terrible day yesterday. It's pulling back a little bit more. Lulu's getting into that zone where I think it's becoming attractive going into its earnings and into its Christmas period. So they report in a couple of weeks on December 5th. And I think we might see a bit of a pop with Lulu. I think that we've had a couple of bad quarters. I think they could be behind us at this point, and they may have made the necessary adjustments in their business to allow for better profitability. So I'm keeping an eye out on that and seeing where it ends up kind of bottoming out at. And I might look at purchasing some Lulu stock prior to the earnings on December 5th. We've got Dollar General down today, up yesterday. Walmart had great earnings this morning. It is up almost $2 in the pre-market. This was something that we called out last night in an after hours video, suggesting that earnings and revenue were going to be good in future forecasts. I'm not sure if I was reading one of the news headlines correctly, but it listed the increase in earnings, and it was a lot higher percentage-wise than I thought it would have been. But either way, they've had another great quarter, and that seems to be set to continue into the holiday season based upon their forecast. So Walmart might be an interesting one to purchase at this point, although once it's popped after earnings, maybe wait for it to pull back a little bit. And that can take anywhere up to 5 to 7 trading days for it to kind of settle back down. There's usually excitement in the first day to 3 days, and then the tides tend to turn and things tend to settle again. Home Depot was up yesterday. It's off more than it was up yesterday, so it's pulling back. Again, I think we're going to see it find kind of a range in the 406, 408 space, and that looks like it's where it's going to kind of settle or at least start the day today. Getting down into the healthcare, just mixed across the board in terms of the pre-market. And yesterday, mostly a down day for healthcare. JB Hunt in the 184s. I think it's a steep price for that company there, but I do like CNR at 152. It came off $1.35 yesterday to finish at 152. I think at 152, this is an attractive long-term purchase. If you're just looking to buy something that will likely do well over the course of the next 6 to 12 months, pays a 2.22% dividend. It has earnings coming up at the third week of January, and it's definitely near its 52-week low. Although it does trade at 18 times, which I think is high for a railroad, it's not unlike other railroad and transportation companies in terms of its PEs. PEs across the board are just a little higher right now than normal, just based on where we are in the economic cycle. But I think you've got some opportunity here at this price point if you were to buy this and hold that, and you're looking for some stability in a dividend. Scroll down to oil. Oil had a great day yesterday. Green across the screen here for oil. Crude is down. It's down only about 30 cents. But that is looking like it's pulling down some of or all of the oil stocks, starting off in the red. I think crude's going to come back above 60, where it finished, in the 69s. And I think oil's going to turn green today in these oil companies. So I'm going to keep an eye on that. But if I start to see a move upwards, I might look at an entry point into some of the oil stocks because I do believe, and I do own some oil stocks now, I do believe oil has bottomed, and so has crude, and it's going to trend upwards into the January, February timeframe. Now we get down into technology, and there were some concerns yesterday around NVDA and the amount of heat being generated out of their new Blackwell chips. And based on that heat, there was then a need for data centers to change how their servers are racked. And that may require more space in the data center. And it could impose some delays if the servers are racked too close, generate too much heat, and then end up causing some issues. So maybe they can't deploy as many Blackwell servers, as many NVIDIA chips as quickly as they intended. So that caused a pullback. I think we're going to see that reverse today and tomorrow into NVIDIA earnings. And like Walmart, I think NVIDIA earnings are going to be much better than expected, and we're going to see a pop in NVIDIA. So a couple of ways to play that would be NVDL or NVIDIA stock directly, or one of the hedged NVIDIA stocks that exist on different trading platforms in the currency of the country in which you're located, if that is not the US. We've got Micron. Micron is pulled back into the high 90s. I think Micron is a fabulous purchase at this price point. Its price earnings is a little ridiculous at 139 times. It pays a minuscule dividend, or less than 0.5%, but it does have earnings coming out before Christmas. And the last quarter was extremely positive. And after that quarter, because going into the quarter, it was hovering around this price point, and it ended up in the 110, 113 range. I think we're going to see this thing get back up into the 110 to 120 range when we get there. And I think all semiconductor companies are going to get a bump upwards if NVIDIA reduces good results. So we'll keep an eye out for that after Market Wednesday and see what comes in. We've got Palantir, was off yesterday. It's off again today, but it's sitting near record highs, all-time highs. Apple's just kind of hovering in that 220 range. It's not doing a lot there. I would stay away from that in terms of any long-term growth right now. CRM has had a great run, and now it's pulling back a little, but we do have results from CRM in 2 weeks. So we'll see where this pulls back to. I think CRM is going to have some good numbers this quarter. They've had a couple of rough quarters this year, but I think they've turned the corner, and I think that the results are going to be positive, and it's going to reflect positively in the stock price as we move forward. Scrolling down just a little further to touch upon some of the highlights here, you've got Microsoft in the 415 range. Again, this is a 430, 440 stock, so this is a great time to pick some of that up at a discount. ARM has dropped down into the 128s. I think if NVIDIA comes out with great numbers tomorrow, ARM is going to spike as well. It'll get lifted with that. AMD had a great day yesterday, but it's pulling back a little bit today. Um, Lam Research, I like this company a lot still. I own a bunch of Lam Research, and it's at its lowest it's been in a long time right now, in the low 70s. So an attractive entry point there. Semiconductors aren't going away, and the need for the equipment to manufacture them is constantly changing and evolving as the technology changes and evolves. So I think these are just strong long-term plays to get into. Tesla is definitely getting a bump for a variety of reasons, and mostly because of Elon Musk's relationship with President-elect Trump right now. I think a lot of that is going to fade if the numbers don't materialize. I'm actually picking up my Cybertruck today, so I'm pretty excited about that. But when I went to have a look at it a few days ago, the lot was packed with Teslas, and I just can't imagine that they're selling that many cars and in the environment that we're in economically, and based on the location that I'm in. So it'll be interesting to see how quickly that parking lot of new cars turns over. And if it's slow, it's a good indication that there could be some pullback there in the Tesla stock. Meta. Meta is a dream come true right now from a price perspective. Meta is in the low 550s, looking like it's going to get down to 551, 552 today at open. I bought some yesterday in the 551 range. I think this is a $650 stock by the end of January when they announce earnings, or into February once their earnings are announced. Let's have a look at when they announce here. It's going to be at the end of January, beginning of February. I think this stock is on sale, and the sale sign is flashing red right now for people to get in and buy Meta. This is a cash generating machine. Fabulous company, generating a ton of ad revenue and investing, can't say maybe wisely, but taking mitigated risks and investing in future technologies that if they get it right, which isn't guaranteed, but it's not guaranteed for anyone, if they get it right, it's really going to add to their business growth and an upward trajectory. Netflix is another one. So I released a video yesterday on great investing advice. So check that out on the channel. It's one of the shorts. And I'll let you listen to that, but this is one of those companies that falls into that category. NVIDIA today, up $1 in the pre-market. I would be buying NVIDIA right now at this price going into earnings after market on Wednesday, tomorrow afternoon. Google had a good day yesterday. It's pulling back a bit today, but Google should be $185, $195 stock. The one interesting thing about Google is it pulled back significantly in the last month based on information coming out of the US government saying that they're maybe looking at splitting up Google into smaller companies and forcing it to sell off different divisions like it did years ago with Microsoft, and it never materialized. But that was before the election, and now that Biden has lost, the Democrats are out across the board and have way less influence. With the Republicans in power, the likelihood of them forcing companies to break up is diminished significantly. So I think that has yet to be reflected into Google's share price. And once that is reflected, I think that stock is going to pop significantly. So I'm a big holder of Google and also of TSM. It looks like the markets have just opened, so we're seeing the pre-market numbers get added into, or really just realigned with the actual market numbers. But you can see TSM is up. I think TSM is a great buy. And then we get down into finance, and we've got SoFi is off this morning. I still love SoFi. I think it'll be a $20 stock by the end of 2025. So you'll likely double your money there. And then most of the other financial stocks are in the red. And I think that's a normal pullback because they had a huge run up on the Trump win, but there wasn't anything really to back that up and justify that run up other than excitement about potential deregulation. So we're just seeing it. I would stay out of finance right now, wait for that to pull back, and then get back into finance. That's where we are today.